today.
Broadcasting live from the Valley of the Sun, Phoenix, Arizona, in the heart of the great American Southwest, it's Erskine Overnight. Now, here's Erskine.
It is our honor, it is our pleasure, and it is the most profitable person and the most profitable money you can spend would be to get a subscription to the International Forecaster. The International Forecaster tells you the way it is. Not what you're hearing on CNBC, not what you're hearing on Bloomberg, but the way it actually is. And it's always a pleasure to have Robert Chapman with us. Welcome to Erskine Overnight. We've got a lot to get into, Mr. Chapman. Stocks to drop. Second quarter earnings, especially the financials, are going to look dismal. And this is going to create a major problem, isn't it?
Yes, it is. For those of you who can't recognize my voice, we're using a new Comrec system, and so I sound a little bit different than I normally do. And I hope the sound is better. It certainly is on this end. The earnings in the second quarter, starting the third week of July, are going to be pretty dreadful, and that should put the market down. I think the market's going down prior to that, but I think that'll put the hex on it, so to speak. I saw the talking heads from the brokerage industry on CNBC this morning, and they talked about how the earnings in the fourth quarter were going to be better because last year's fourth quarter was so bad. Maybe, maybe not. But we're going to go back down and test 6,600 on the Dow. And I think interest rates are going to continue to pressure higher on the 10-year note, probably 4 to 4.25. And maybe even get it higher than that because they're going to have a hard time selling Treasury paper, agency paper. Those are Treasury bonds. And the agencies are Fannie Mae and Freddie Mac, et cetera. And they're still buying what is called collateralized debt obligations from banks. We hear varying figures of what they're paying for the bonds that they're buying, but it's my guess it's anywhere between 12% and probably 70%. And the Fed won't tell you what they're paying. That's another one of the secrets of the Fed Reserve, which we want to end by getting an investigation of the Fed, which is underway legislatively with Ron Paul's H.R. 1207. And incidentally, it has 233 co-sponsors, which is incredible. And I think we got a shot at getting it passed. And that will change everything. And incidentally, what you're seeing with this new regulatory policy agenda by the White House, supposedly, giving the Federal Reserve all these new powers, that is psychological warfare. What they're doing here is they're making their defense an offense. And what they're doing is they're putting the Fed in a position where you just are going to be told that we can't let it go. We must have it, even with all of its sins and warts and whatever. And that's going to be their defense. And that's what they're going to try to sell to Congress. And hopefully it won't work because we got to get rid of the Fed.
Part of what they're doing, according to Mr. Geithner, is a crackdown on firms that could cause damage to the economy. In other words, what they're saying is any firm that could cause some damage to the economy, we're going to take it over, tell them what to do. This is pure and simple fascism in its most obvious form, when they're telling firms what they have to do if they deem them of value to the country. This is absolute fascism, Mr. Chapman.
Well, it certainly is, and the government has no place or should not be in business as such. Regulating, yes, But, I saw Mr. Geithner this morning say that the Fed didn't have any control over the banks because they were thrifts. Well, that is so much malarkey, and that's just not true. But, the people in Washington and Wall Street and in banking couldn't tell the truth if it jumped up and bit them on the nose. And
they're thrifts,
just
all
like
right.
all the
They're
figures, all the figures that come out from the Labor Department, the Bureau of Labor Statistics, and the Commerce Department, they are all uniformly bogus on the unemployment figures. Just ridiculous. And Wall Street knows what's going on, and no one will say anything. And the reason why is they'll lose their jobs.
Let's talk about the example we mentioned before we went on the air, the FASB, Federal Accounting Standard Board. And what they did, it was watered down by Bush. It was further watered down by the Obama-Biden group. It allows financial corporations to overstate their earnings by 50%. So investors have no way to trust the numbers. And the second change allows this hold-to-maturity value for assets, creates a fictitious asset value. So you've got these banks carrying CMO paper on their books for 20 times what they're actually worth. And this creates an artificial solvency for these institutions. This is going to come home to roost. We've got a lot of commercial loans coming up very shortly, second half of 2009. And when these commercials hit, because you've got, and you talk about this, you talk about how you've got the declining rents, you've got the vacancies coming up. And this is going to hurt not only banks, but insurance companies, is it not?
It certainly is, because insurance companies are big investors in that sort of thing, which is commercial real estate. But getting back to the FASB, they were called by Washington, told, look, we want you to change your opinion for the time being on marking securities to the market. And they changed. They changed to what is called mark to model. And marking to market means that something is trading, or something similar is trading, and let's say that you got a bond and it was issued at $1,000 and is trading from time to time for around $600, or another bond that's similar to that one is trading around $600. Well, that's where you would mark it. So mark to model is you mark it to whatever you think you'd like to. And that's what you're talking about. This thing is absolutely crazy. It's madness. And so... Absolute
madness. You've got second quarter earnings that are looking dismal. You've got unemployment still increasing. And you can hear different numbers that they're tossing about. But the unemployment figures for this last period was 608,000 for the last week. I mean, 608,000. That's a lot of unemployment. The credit crisis is still tight. You've got the real estate commercial still collapsing. But you've got one figure that you talk about, Mr. Chapman, that I didn't even know. You talk about the number of new housing, the houses being built is increasing. This doesn't correlate with what we're seeing in the real estate market. What's going on with that?
Well,
let's talk. We need to take a break. Let's talk about that when we get back. Why are they building new houses when they've got all this glut of homes right now? With Robert Chapman, the international forecaster.